let's talk about something fascinating: how a single, often random number can completely hijack your perception of value and steer your most important decisions. It's a powerful, mostly invisible force, and we're about to pull back the curtain on it.
All right, picture this. You're out for a nice meal. You've just sat down, you open the menu. What's the first thing your brain does? It starts scanning, trying to figure out what's normal here. It's looking for a reference point, any clue to ground your expectations.
And then bam! There it is, right at the top of the page, in a fancy box, the chef's special. A Wagyu ribeye for $150. Now let's be real, you're probably not ordering it, but it doesn't matter. That number, 150, has just been planted in your head.
Now, as you keep reading, you see the salmon entree for $45. A minute ago, that might have seemed a little pricey, but compared to the $150 you just saw, the salmon suddenly feels incredibly reasonable. A bargain even. See what just happened? You, my friend, have just been anchored.
And that little menu trick, that's just the beginning. This brings us right into our first section, the invisible pull. We're going to dive into this hidden force that is constantly and quietly shaping the choices you make every single day.
So what is this officially? Well, it all goes back to the legendary psychologists Tversky and Kahneman, who nailed this down way back in 1974. They called it the anchoring heuristic. And it's our deeply human tendency to grab onto the very first piece of information we receive, that's the anchor, and then let it completely skew everything that comes after.
But why? Why are our brains wired this way? Why do we get so stuck on that first number? Well, in Section 2, we're going to look under the hood at your brain's faulty shortcut.
You know, it really boils down to a two-step process. It's super simple. First, an anchor gets set. Any number, really. But here's the kicker, the part where it all goes wrong. The second step, the adjustment. Our brains are, frankly, a bit lazy. We consistently fail to adjust far enough away from that initial anchor.
And there's a really good reason for this. Think about it. Doing the hard work to find the truly accurate answer takes real cognitive horsepower. It's slow, it's difficult. So our brain, this incredibly efficient organ, defaults to a shortcut. It's called plausibility termination. It just moves away from the anchor until it hits an answer that feels plausible, good enough, and then it just stops. It's all about conserving that precious mental energy. And this creates a perfect storm, a real domino effect. That first number throws our whole estimate off from the get-go. Then our lazy adjustment keeps our final guess way too close to it. And then, to top it all off, another bias kicks in. We start looking for reasons to prove our initial anchored estimate was the right one all along. It's a vicious cycle.
Okay, so menus and mind games are one thing. But what happens when we take this into the real world, where there's serious money on the line? In Section 3, let's talk about anchors in the market, from high-stakes negotiations to your own investment portfolio.
I mean, think about any negotiation you've ever been in. Whoever makes the first offer gains a massive psychological advantage. That first number isn't just a suggestion. It becomes the center of gravity for the entire conversation, powerfully pulling the final price right towards it. It's a huge deal.
And in the world of investing, well, anchoring fuels one of the most destructive and costly biases there is, the disposition effect. This is our proven, painful tendency to sell our winners way too early and cling to our losers for dear life. So what's the anchor that's dragging us down?
It's the price you paid. That number becomes this deeply personal, deeply emotional anchor. And when a stock dips below that price, we irrationally hold on, telling ourselves we'll sell when we can just break even. We're not making a financial decision anymore. We're trying to avoid the emotional pain of admitting we made a mistake.
So you might be thinking, okay, I get it for us regular folks. But the pros, the highly trained six-figure analysts, surely they're immune to this stuff, right? Well, let's talk about the expert's paradox, because the research here is absolutely fascinating.
So take a look at Wall Street analysts. They're making these complex forecasts all day long. But it turns out they get anchored too. A key number for them is the industry's median forecast earnings per share. And studies show that if a company's actual earnings are tracking below that anchor, the analyst's forecasts for that company become systematically, predictably, too optimistic. They just can't adjust down far enough.
So, it seems pretty clear, right? Anchoring is a bug, a flaw in our mental software that leads to bad decisions. But what if I told you that's not the whole story? What if, in some very specific situations, it's actually a feature?
Now get ready for this, because this result is just wild.
A major study looked at the group of elite, experienced traders. They literally called them trading masters. And they found that the traders who showed a higher anchoring bias actually had higher portfolio returns. How on earth is that possible?
Well, the answer comes down to one crucial word: context. It is everything. For these pros, making split-second decisions in chaotic markets, what looks like a bias is actually a highly tuned, super-fast shortcut. See, they aren't anchored to their emotional purchase price like the rest of us. They're using key technical levels as strategic anchors to make rapid-fire decisions that, on average, pay off.
Okay, so unless you're one of those trading masters, anchoring is probably a problem for you. And that brings us to our final and, I think, most important section: breaking free from anchors. Let's get into some real, actionable strategies you can use to reclaim your rational mind.
But first, a crucial warning. Just listening to this, just knowing about the anchoring bias, is not enough to fix it. I wish it were that easy. Study after study shows that simple awareness training consistently fails. You can't just tell your brain to stop taking the shortcut. You have to build a better road.
So your first and most powerful tool is to build structural controls. This is about engineering a better process, not relying on willpower. It means you define your objective investment criteria before you ever see a price that could anchor you. It means using a mandatory checklist for every single decision. It means creating hard and fast rules for when you'll buy and when you'll sell, taking your emotional, in-the-moment brain right out of the equation.
Your second tool is all about actively fighting back. We're talking about cognitive reframing. You have to consciously and systematically attack the anchor's hold on you. This means you have to go out and actively find people who disagree with you. Run 3 different valuation models, not just one. And here's the expert-level move. Physically write out or argue out loud the strongest possible case against your own decision. That single exercise can absolutely shatter an anchor's power.
And finally, your third weapon is time. It's so simple, but so effective. See, anchors have the most power in the heat of the moment, so you use time to diffuse that power. For any big decision, you must institute a mandatory cooling-off period. A day, a week, whatever it takes. By separating the moment you do the research from the moment you actually pull the trigger, you let that anchor's immediate emotional grip just dissolve.
So we'll end with this. From the very first salary you were offered, to the asking price of your home, to the price you paid for that stock you're holding on to, anchors are everywhere, and they are silently shaping your reality. So the most important question isn't whether they exist, but this: what unseen anchor is influencing your most important decision right now?